If you've been paying attention to global markets over the last few years, you'll probably have noticed that there's something exciting happening in India. With its GDP now ranking as the 5th in the world, and some forecasts suggesting it will surpass Germany and Japan to become the 3rd largest by 2030, India's growth is hard to ignore. Couple that with the China Plus One strategy, political stability, and a few other key factors, and it's no surprise that investors are looking to India for their next big growth opportunity. So naturally, I wanted to get myself exposure to the Indian stock market, but I wanted to do this smartly and cost-effectively from the UK. Here's what I found and the surprising twist in my search for a low-cost Indian stock market index fund. But before I dive into that, let me first tell you about my first dip into the Indian stock market back in 2002, a time when I was pretty clueless about investing and definitely didn't understand how fees can really eat into your returns. Back then, I bought the India Focus Fund by Fidelity. All I knew was the marketing blurb, some past performance data, and that it seemed like a safe bet for exposure to India. Well, that was then. Now I know a lot better. Fees matter. And boy, did I learn it the hard way. So this time, when I went looking for an Indian stock market fund that tracked the index, I wasn't going to fall for the same marketing tricks. I knew exactly the type of fund I was looking for. An index fund. It needed to be something low cost because let's face it, if you're tracking an index, it doesn't need to cost an arm and a leg to do so. Here's where it got frustrating. I started looking at all the usual suspects. Fidelity, Hargreaves Lansdown, Charles Schwab, Trading 212, you name it. All of the stock market index funds tracking India that I could find were charging over 1% annually. Seriously, for a tracking index fund? That's crazy. The whole point of an index fund is that it tracks the market. It tracks the stock market. Nothing else. It doesn't need a team of analysts making complex decisions every day. It doesn't require a huge amount of research. It just follows the numbers. That's it. So when the fees are that high, and yes, 1% and above is high, it feels like you're paying someone to do less work than you do while watching Netflix. That wasn't going to happen. I looked at Fidelity, which had the cheapest offering in this crowd, but even they were charging more than I was willing to pay. Over even 0.5%? No thanks. Not for an index fund. But I didn't give up. I kept on searching. And then I found it. And I'm going to give it to you straight away. No more hanging around. It was called the Franklin Templeton FTSE India UCITS ETF, or as it's known by its ticker symbol, FRIN. Its charge? Just 0.19%. That's it. 0.19%. It invests in large and mid-cap stocks in India. And with such a low fee, I just couldn't pass it up. But you might have noticed something there. I didn't say it tracked the stock market index. It's slightly different. And this is where I don't think it's perfect, but it will do for now. This fund doesn't track the typical Sensex, the Nifty 50, the BSE or the NSE, which is the Bombay Stock Exchange or the National Stock Exchange of India. These are the two main stock exchanges in India. Instead, it tracks a different index that places caps on the weightings of individual companies. Now, I've got to admit, it's not perfect, and I'm not the biggest fan of this kind of approach, because I like a more true-to-market strategy. By limiting the weightings, you're essentially deciding that some companies are too big and should be diluted. And I get it. It prevents over-concentration in one or two companies. But I'd rather see the actual market play out, warts and all, without artificial caps. Still, the low fees have won me over for now, so I'm sticking with it, at least until I can find something better. And one of the ways I'm doing this is I'm trying to get myself direct access to brokerages based in India. And if you can, I'd recommend this approach for you too. By doing this, you'll be able to access a much larger number of index funds and have access to many of them to invest through, with of course far lower fees. Now, there'll be lots of other actively managed funds here too, and I'd avoid them like I do all actively managed funds from any stock market in the world. But for index funds, eat your heart out. But for those of us who don't have access to the Indian stock market through brokerages based in India, this Frank Templeton ETF, or FRIN, has been my go-to for cost-effective exposure to the Indian stock market. India's growth is undeniable, and whilst you'll find plenty of options for trying to access that market, low-cost index funds are the right way forward for me, and probably for you too. Though of course, always do your own research. It's about getting the most out of your money without letting high fees eat into your returns. And remember, high fees eat into your returns more than you expect them to. But of course, this is not financial advice. I'll always recommend that you do your own due diligence. I provide this information for educational purposes only. And now it's your turn. What Indian stock market index funds do you invest in? And how much are you paying in fees? Drop your thoughts in the comments below. I'd love to compare options. And I'll tell you what, I'll make you a deal. If you want to earn yourself a biscuit, yep, a biscuit, then hit the like button and share this video with others. You never know how the simple gesture of sharing it on your socials could help someone. And then, well, go and get yourself a biscuit. You've earned it.